Hello and welcome to Pro Trader Strategies Market Commentary for Monday, September the 12th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. And therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Not a whole lot of economic data today. We do have FOMC member Bernard speaking. That's later on today, 1 p.m. Eastern. Friday's sell-off was due in part to a lot of Fed governors coming out and speaking that they were still hawkish, meaning that they were going to continue to look at raising rates even at this September meeting. And with the overall economic data that we've seen, that's just not what the market wanted to hear. So down big, but today, as you can see, most markets are taking back at least half of what they lost on Friday. As you can see with the crude oil futures /CL up 58 cents, almost 60 cents. They were just trading at their highs of the day, just a couple of pennies off of that as we speak. On to gold. Gold continues to slide down $7 on the day, but the key note here is to watch this 50-day moving average, and it is below that. If it settles below that 50-day moving average, that is going to be looking pretty bearish and not so good for the bulls. On to the bonds, we got /ZB here, and they are up 12 ticks on the day, down 12 ticks on the day, down about a half a point right now. But this doji right here at the bottom of this move is starting to look like a lot of support happening right here at this value area node. It isn't the point of control, but as you can see, there is a lot of time and volume spent there. And another supporting factor for the bulls would be that it is kind of rejecting away from this 200-day moving average, which should act as a lot of support as well. Onto the NASDAQ /NQ, up 52 points on the day, and they are taking back about half of the losses from Friday. As you can see, they came down and tested this value area high, which acts as support, and rebounded away from that quite dramatically, and haven't seen much of a pullback at all in any of the equity markets. E-mini S&Ps /ES up 13 points on the day, and not quite half the day taking back, but again bouncing off of this value area high and moving away from that with quite a bit of gusto, if you will. And then on to the E-mini S&P breakdown on a 15-minute chart. This is right on the open of the day session, and we just blasted higher. Overnight it was pretty consolidated and in negative territory. It was looking pretty bearish, but the overall markets have pushed quite a bit higher. With the couple of trades that I've done, this one actually I did on Friday. I talked about this in the webinar on synthetic longs. It's a way to create a long position in an underlying, but using about a quarter of the margin that you would normally need for just going out and buying that stock, say at a discount brokerage house. But this acts the same way. But this particular trade with Verizon, I had put on during the short call butterfly webinar, so you can check that out. ProTraderStrategies.com. These take a lot longer to come to fruition, if you will, and this did take me right up into the last few days of the September contract, just as one would expect. And I had on the September 50, 55, 60 call butterfly, and I originally sold it for a $3 credit, bought it back for $2.19. So it was very close to in line with my rules there. Usually I like to try and get about a third that credit back, so $2, but it had come back down and bounced around. It's going to be getting more gamma embedded in some of those strikes, so I just wanted to get out of it, to be quite honest, and didn't want to play around with it. It came in really quickly with the big sell-off on Friday and didn't want to mess around with that anymore. The VIX, this is a trade I put on quite a few weeks ago actually, and got the volatility expansion on Friday that I needed. Today it rallied up and touched my short strike, so that's right in line with the rules of a long spread that I talk about in my webinars as well. And I had on the September 15-20 call spread, so I was long the 15 calls, short the 20 calls to really help finance some of that intrinsic value, or extrinsic value I should say, and that worked out quite nicely because I originally bought it for 90 cents, got out of it for $1.45, so very close to in line with what my rules are with that. But one of the major rules is if you beat the probabilities, it goes up and touches your short strike. That's the time to really get out. I didn't get out right on that when it was trading at 20. I kind of had to chase it a little bit, but ended up giving up a little bit of edge to get out of that one, so that worked out nicely. Then on to the diamonds. Diamonds I had on the September that expire on the 9th. The 185 put, I bought the 185 put. I did a pretty small, paid $1.84 for that put. Market big sell-off on Friday like we talked about, and decided I wanted to see if there was a bit of continuation to that. Since those were expiring on Friday, I decided to put the stock to someone and take on the short underline. So I was short the DIAs, and this morning started seeing a lot of support there, so I ended up buying half of those back for 180.43. So it wasn't the low of the day, but it was, as soon as I saw it being, this acting as a lot of support and the bulls starting to come out a little bit, I decided to cover half of those. I'm going to ride the other half out for quite a while, or hopefully quite a while, and get this to come down to the point of control, which is what I was looking for this trade. Then with SPY is a trade that I just put on today. We got some volatility expansion. It put it right in line with my rules for an ETF on implied volatility, so I decided to put a strangle around that. If we're going to see some of this volatility, like the VIX, come off a little bit like we saw in that last chart, then this will help me out quite a bit with this. So the time to put these strangles on a short side is when volatility has expanded, and then we're going to look for it to retract back to the mean. And so that being said, I did the October 204 puts with the 220 puts, and it's a skewed strangle, so it's not right in line with the deltas that I talk about in all these different webinars and daily market commentaries. But the reason why I skewed it a little bit was to get those 220 calls above the this major high that we've seen. So I think I'm pretty safe with those 220 calls. And then the 204 puts are down here below the point of control, which is where I see the market actually going to, but that would act as a major support area. So I got myself below that and above the highs to create that strangle, and I collected $2.48 for that. So if I can get some volatility to come out of these a little bit on that one, then that will work out nicely. Anytime the market starts to rally, that's when you see the volatility come out. So that's what we're looking for this. Now, Friday's webinar is going to be on synthetic short stocks. So I'm going to show you how to build a strategy around being able to short stock. And a lot of times it's difficult to borrow the stock if you're going to try and short that underlying, but it's easy to create a synthetic short using options, so we don't have to worry about borrowing the stock and all the myriad of things that you have to work against when you're trying to short a stock. So it's also going to be a lot less margin intensive than one would experience if they were to just go out and try and short that stock as well. So there's a lot of benefits using options to create that position. All right, so I'm going to go through all those rules on Friday. Go to protraderstrategies.com, sign up for that. That's all I got for you guys today. If you can't take that, take it easy.